Hello and hello and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, markets analyst at FX Pesa. So today we had an interesting day with quite a number of central banks announcing their interest rate decision, and at the same time we had heightened volatility for European currency pairs. And this is basically for the Swiss franc, the UK pound, and the euro. So we have seen all these currencies make quite a strong rally against the dollar. And this is in continuation with what happened yesterday after the FOMC press conference, where the dollar continued losing against other currencies, while US equity indices continued rising higher. So today, I would tend to think of this session as a continuation of what we covered in the morning. So we did a comprehensive evaluation of the events that transpired yesterday during the Fed meeting. And today we continue with that story, try to understand where the currencies are headed next. So if you have any questions or comments, feel free to type that in the live comment section. And that will confirm that everything is working just fine. So hello, J Squad, and welcome to the session. Thank you for joining. All right, let's get things started by first focusing on the economic calendar. And once we are done with the economic calendar, then we look at the events that transpired earlier in the day. So clearly, today was a high impact news day. So we started with New Zealand quarterly GDP, which came in at negative 0.3%, meaning that the economy is slowing down. Then later on, we had news coming in from Japan, for machinery orders slightly reducing from 1.4% to 0.7%, but this was better than expectation. MI inflation expectations for Australia came in at 4.5%, which is lower than the previous number of 4.9%, meaning that inflation expectations are getting anchored in Australia. Then we had the RICS house price balance, which came in at negative 43%. This was an improvement from the previous reading, and of course, better than expectation. Then we had the surprise jobs data from Australia, where the economy created 61.5K jobs, almost 50% higher than the previous reading, and of course, better than expected, while unemployment worsened slightly to 3.9%. So we also had revised industrial production in Japan coming in at 1.3%, a slight improvement from the previous reading of 1%. Then we had the producer price index in Switzerland coming in at negative 0.9%, indicating a potential drop in prices as we approach the next year. So today being the 14th of December, we only have a couple of days, 17 days before the end of the year. And now we focus on the monetary policy on the three central banks that were announcing rates today. So the first one was the Swiss National Bank, which just followed the US Fed by holding interest rates steady at 1.75%. And this was early morning at 11:30. So they also released an SNB monetary policy statement. So in the statement, the SNB basically showed that they are not looking to cut interest rates this fast. So they might want to hold on to these rates for a while, despite their inflation dropping towards below target. So it's currently at 1.4%. The target is 2%. So the SNB has already won against in the battle against inflation. But then they are not quick to cut rates. So in this case, we continue seeing this being a thing happening across board. So for the UK, we had 3 members voting for a rate cut, whereas 6 monetary policy committee members voted for holding interest rates steady at the current level. So the decision was to hold at 5.25%. And then later on in the afternoon, we had the ECB, or the European Central Bank. They voted on holding interest rates at 4.50%. So the key highlight, or the key difference or divergence between the central banks, was that for the ECB, they are not ruling out another rate hike. So the ECB is still very much concerned that inflation expectations are significantly high, and it's looking to potentially do yet another rate hike going into next year. And in that case, it has the overall impact of strengthening the euro against other currencies. So this may explain why we have had a much stronger rally in the euro against the dollar compared to other currencies. So for the UK, they're also not hasty in cutting interest rates. So they might consider holding rates higher for longer. And we know that yesterday when we were focusing on the Fed, there was a very strong likelihood that if the data keeps coming as it has been doing, showing consistent results that are consistent with the Fed's expectations, then in that case, we might have an array rate cut as early as March next year. So what this means is that there's now some form of policy divergence, where for the ECB, it might hold rates higher for longer or even consider another rate hike. Whereas for the US, the possibility for another rate hike is very minimal, and the possibility for a rate cut is increasingly high. So in the afternoon, we also had core retail sales from the US, which came in at 0.2% month over month, whereas retail sales were up 0.3%. This is for the last 1 month. And this basically means that the shopping that happened in November was a big contributor, especially considering the numbers we talked about in the morning. And this is the Thanksgiving, Black Friday, as well as a Cyber Monday that happened earlier in the month. Earlier last month, showing that the US consumer is currently very strong, and we could be seeing a stronger GDP growth as we head into next year. So unemployment claims came in at 202K, slightly below the previous reading and below the expectation. So when you have less people fighting for unemployment insurance, then it basically means that the economy is currently very strong. So with a very strong job market, then we are bound to see some further strong growth in the US economy. So from the line chart, this is how it looks like. So we have seen the unemployment claims consistently moving down, meaning that the job market in the US is tightening. And this is not in line with the Fed's expectations. So this may be the reason why we are seeing the dollar attempting to make a recovery in some pairs. So going into the charts, this is what we are looking at. So the Euro USD made a surprise big spike yesterday after the FOMC press conference. Then later today, it has continued moving higher. I remember in the morning, we projected that the price would rally and get to 1.09634. But then we have already broken that level, and we are headed for yet another resistance level. And this is 1.10156. So there is that overall expectation that the euro continues strengthening on bets that the ECB will keep rates higher for longer, and a potential rate hike might be on the way. So in this case, we continue seeing some upwards trajectory in the Euro USD. So in the 4-hour chart, this is how it looks like. So we are just completing this U-shaped momentum. And if you look at the longer term pattern, then this is what we may describe as a cup and handle pattern, which is basically considered as a continuation pattern. So in this case, it basically means there's a high likelihood that we see the price of Euro USD continue moving higher and eventually getting to 1.10156. So as for the pound, we also projected that it would rally to the previous high of 1.27326. We already got to that target, and now we are seeing some further momentum upwards, which might lead to another high. So the last time we saw the pound trading at this level was on the 22nd of August, and there's still more room for upside momentum. So in this case, if you look at the potential targets from the current rate, so we could be seeing the pound rallying to 1.28475. And this is not quite a huge distance. It's quite a small distance. It's something that could happen as we approach the end of the week. or perhaps in early next week. So as for USD JPY, you can see that the dollar has continued losing ground to the Japanese yen. So we had a very strong support area here that was marked last week. And now this week, after yesterday's momentum and today's further momentum downside, we seem to be getting some form of support around that area. So from the daily chart, you can see that the last time the price traded at this level was on the 4th of August. So it's also a new low. But then if you check the consolidation here, it might help us understand where the market might be headed next. So in this case, if you look at the 15-minute chart on USD JPY, all you have to do is to monitor this level here as a resistance. And of course, for the support, it seems to be slightly tilted, meaning that the market is forming lows along this trend line. So in this case, monitoring this high and this low will help us identify the next momentum. So momentum could be a continuation of the original move, which means that if the price breaks the blue trend line here, then we go for short selling positions. But then if we break this resistance, then there's a potential of a reversal. And in that case, we go for bullish positions. But as we all know, there's a high likelihood that the Japanese yen continues regaining momentum against the dollar. So there's a high likelihood that this could be happening on the downside. So in this case, we keep monitoring this consolidation because clearly over the last couple of hours, the USD has not been moving up or down. We can say the overall price momentum has been following this path. So we wait until we see our potential break. So the best trade of the day, and this is something we discussed in the morning, was quite fundamental. USD CAD basically dropping from a previous level of 1.354 down to 1.33822. And this is towards a very significant support here. So after the Fed decided to hold rates and kept hopes alive for another potential rate cut, and on the other hand, oil markets continued recovering, thereby supporting the Canadian dollar. So it was a straightforward bet where we are seeing a weakening US dollar and a strengthening Canadian dollar. So a pretty straightforward bearish momentum. And as you can see, we have had 6 consecutive hours of bearish momentum in this pair, where the, 6 consecutive 4-hour candlesticks. So from the 1-hour chart, if you look at the last red candlestick, I think we are looking at 10 consecutive 1-hour candlesticks, indicating a very strong control by bears. So we are seeing a very strong bearish momentum, and I hope this will continue and end the journey once it gets to the support. So the support is just around the previous low, and this is around 1.33791, and there's still more room for downside. So there's that potential that the market will eventually close that gap. So in this case, just a very small momentum, but if you're a scalper, this is something you can benefit from as the market gets to that target. So as for gold, I mentioned earlier in the morning that we monitor the momentum along this 5-minute chart. So what we saw is the market breaking towards the upper side as gold continues recovering, but then after the break, it did not hold for long. Market pulled back downwards and has been trading along this path. So what this means is that there's attempts to move higher and less attempts to move lower, meaning that there's a high likelihood that the market continues along this trajectory and eventually gets to a new high. So we have seen extreme volatility in gold, especially after hitting a high of our 2180. Then immediately we had a very important drop, price dropping all the way down and getting to a price level of around 1972 before bouncing back yesterday. And today we could be seeing a continuation. So clearly, this market has really struggled to continue with the bullish momentum. You can see the strong pin bar indicating a rejection of lower prices. So in this case, there is still hope for further upside momentum. So on the 4-hour chart, we don't have a red candlestick yet. So at some point, the market is bound to break out of this volatility, where we've been seeing ups and downs happening all over. And this is since last night. So up, down, but eventually we will have a direction. So as for AUD-USD, what we are seeing here is a very strong momentum yesterday, followed by further momentum upside, especially after the jobs report. And now we are seeing the market has retested this support. The support was at 0.66890. But then the retest has taken quite a number of times. This is 4 times the market has retested this area, and each time it has failed to break that level. So from the 15 minutes chart, this is how it looks like. So on the lower side, I think some form of trend is forming here. But then on the upper side, there seems to be some form of resistance following this path here. So breaking above that would mean that now we start looking for bullish positions. And of course, it seems like there'll be a continuation higher. So from the 4-hour chart, this is how it looks like. So it's a market that is exploring new highs. And this one was last seen on the 1st of August, and there seems to be some further momentum on the way. So there is a possibility we could be seeing the AUD USD currency pair continue to rally and eventually get to 0.68180. So as for US equity indices, first we look at the Nasdaq, which had a very big rally yesterday. Then today in the morning, it continued moving higher before it started weakening towards the evening. So from the 1-hour chart, this is how it looks like. And as I explained earlier in the morning, whenever we have such a big spike, you never want to buy the top. You don't want to buy at the top of prices. So you want to wait for a pullback so that you can squeeze in a position. And I think right now it's playing a good role in showing a potential entry point. So from the last couple of 15 minutes, I would say last 1 hour, you can see a sequence of green candlesticks indicating some strong support. So this might as well be the entry we have been waiting for the better part of the day. So there's still more room for upside, and we are very close to the all-time high. So the all-time high for the Nasdaq is 16,776. And from the all-time high price to the current price is about 1.19%. So there's a very strong likelihood that the Nasdaq might go for another all-time high. And this means that the market bounces from here, breaks the previous high. That is the high of day, and potentially is above the all-time high. So in this case, everyone is trying to time the market and identify when the market finds support so that they can squeeze in more bullish positions. So the Dow Jones today, it basically hit a new all-time high. So it has never traded this high before. And the highest price we have ever seen for the Dow is right here. And this is that 6,955. So in this case, after breaking above that area here, this was basically last night. Today, we are seeing some form of continuation. But as we all know, for these major price levels, sometimes the market likes to do this. Go back to the same area, retest, and then continue in that direction. So this could be a potential play if you are patient and wait for it to play out. But as per now, it seems like the market is pretty strong and is attempting to move up higher. So for US 500, this is what we are looking at. So if you go to the daily chart and then you zoom out, then you can see that the S&P 500 is also on course to tracking its all-time high of 4813. So in this case, what we are looking at is a very strong bullish momentum that is headed towards the all-time high of 4813. So from H1, there seems to be some form of a pullback that was being attempted earlier in the day. But then from the price action we are seeing, it seems very likely that the market is going for an all-time high. So in this case, after this consolidation, we could be breaking higher and getting to the all-time high. And this is quite achievable since it's within limits and at 4813. So there is a good likelihood we'll be seeing the market rally towards that point. So as for Brent oil, we speculated that it would continue making a recovery and eventually get to the previous resistance. So eventually, since morning after the snapshot, we saw the price going up and getting to $76.784 per barrel. Now the price has broken that level and is headed higher. So the other potential price action point seems to be a previous low that we experienced a couple of weeks ago. So around 77.735. And of course, if the price moves higher than that, then we start looking at other price levels that were acting as resistance as well as support. So I want you to pay focus on this area here. So this was support, and then resistance. So now if the market cruises even higher and crude oil continues with this strong recovery, then the target becomes $79.051 per barrel of oil. So from the 4-hour chart, this is how it looks like. So if I try and remove all this noise, then you can see it was a pretty strong bearish momentum. And of course, there seems to be some form of trend line playing out here, acting as resistance, which basically almost coincides with our target area. So if the target area is $79.051 per barrel, it's also lying on the upper trend line. So there seems to be a high likelihood that the market will eventually get there. So for the French 40 index, we have seen the market pull back downwards, especially after the ECB indicated that it might not be done with rate hikes. So immediately we saw the market making a reversal. And of course, if you look at the Euro 50 index, also there was a very sharp reversal, reversing yesterday's price action. But then as we approach the end of the day, there seems to be some form of strengthening coming into the market. So the Chinese yuan has made an impressive drop. So in this case, the yuan gaining against the US dollar up until it got to this support. And as we all know, some of these support levels can be pretty strong. And it seems like the market is likely to bounce from this area. So if the dollar is regaining some form of strength from these levels, then in this case, we could be seeing the dollar gaining against the Chinese yuan. But then from the indications we are seeing on the dollar index chart, it shows an almost straightforward direct momentum downwards, meaning that the investors and traders alike are basically dumping the dollar and going for other assets such as equities and other currencies like the euro. So with a big sell-off in the dollar index, then the Chinese yuan might eventually break this level of 7.11171. So a break below this level would mean a continuation. So as a trader, this is the area I'll be focusing on to see if there's a potential break happening. And if that happens, then it might necessitate going for short selling positions. So Bitcoin just had a big spike downwards. I think the support level we saw on this spike was somewhere around 41,424. And then after the rejection, you can see that the market is recovering and now is headed higher towards the open of the day. So the open of the day is slightly higher. So we are looking at a market that opened higher at around 43,054. So there's still that likelihood that the market will recover the entire gap and get to 43,054. So as for the Swiss franc, which had a central bank meeting earlier in the day, you can see that it's continuing to strengthen against the US dollar. So remember, the currency with the strongest correlation with the euro is the Swiss franc. And if it's dropping as much, then there's a likelihood that the correlation is playing a role in this case. So there's still some further downside momentum playing out. And of course, the long-term support level for USD CHF is all the way down. So we could be seeing the market going down to 0.85537. So as for now, the momentum continues. And as we approach midnight, we expect to see some form of consolidation. So the volatility might not be as strong as we had experienced earlier in the day. So from the daily chart, this is how it looks like. So it's a market that is consistently weakening, meaning that the dollar is consistently losing against the Swiss franc. So in this case, there's more room for downside. And as for New Zealand USD, we are seeing the continuation playing out. So big spike yesterday, pulled back and then continued with the momentum later in the day. So pulled back during the London session, and then as we got into the New York session, there was 3 consecutive candlesticks rejecting the support, more like a devil's fork. And in this case, the market is changing direction. So in this case, there's still more room for upside momentum. And of course, the immediate target becomes the previous high. And this is a high that we saw earlier in the morning. So a rally towards this area might make more sense of 0.62484. So US oil very strongly correlated with Brent oil. So there seems to be a very strong resistance at $74.1 per barrel. So in this case, it makes more sense to target this area as a take profit point, especially after the market has broken this resistance, which was the highest price that we saw on Tuesday at $72.164 per barrel. So in this case, 74.1 seems like a nice target. So pound yen is also making a V-shaped recovery after retesting this support. So we are seeing the pound being pretty strong, and it's currently strengthening against the yen. So it's almost recovering all the losses it had made earlier in the day. So remember, the price opened here. So at 181.680 is that likelihood that we make an impressive recovery and end the day here. But then the new target becomes the day's high. That is, if the price completes the journey here, then tomorrow we start looking for 184.314 price level. So there's a good question here. Why is the 2-year bond yield strongly correlated to the currency of its jurisdiction, say the US, the UK? So when we talk about bond yields, they basically determine the cost of money or the price of money. So if you have cash, let's say you are an organization, you are running a reserve, and you want to put this cash somewhere, the most immediate idea you get is putting this cash in bonds. So you don't want to lock your money for the long term. So you're looking for short-term equities because it's cash at hand. So if the yields are moving higher, then what do? You basically put some of your reserve cash in these bonds. You put it into a 1-year bond or a 2-year bond, and then at the end of 1 year or 2 years, you get some good returns from your investment. And yet, you are still very liquid. You can liquidate your money anytime you want. So when you do that, and I want us to think bigger here. So if there's thousands of companies in the US and some majority of them put some money in this 2-year yield, then it basically means that it's pushing more currency out of circulation. So by pushing more currency out of circulation, then you start seeing the currency also strengthening. So if a lot of Kenyans were to put out of money in 2-year bonds, or a lot of Kenyan companies were to do that, then there will be less Kenya shillings circulating in the economy, which would make the Kenya shilling valuable. So the higher the bond yields of the short-term maturities, the higher the value of the currency. So that explains why there is that strong positive correlation. So hi, Vinod, and thank you. Welcome back to the sessions. So when you have a strong retail sales as an occurrence, will that translate into a limited bull run? Yes, definitely. So a very strong consumer basically means that companies can sell more goods. And in that case, if Apple, Google, Microsoft, and all these magnificent companies keep making more sales, then they create more value for their shareholders. And this means that the equity indices also continue to rally. So a strong retail sales is an indication of a healthy consumer. And of course, this leads to a rally happening in equities. So there's a good question here. How about gold? I think we have already covered gold. So for gold, it's currently making a very impressive recovery. And this is after what happened on Monday last week. So Monday last week, this is when the price spiked all the way to 2180. Same day, dropped all the way to below 2020. Then for the entire week, kept going down. Early this week, it happened to reach 1972. So this is quite some volatility. So if I was to count the number of points between the high and the low between the last 2 weeks, this is 9.5% volatility in gold and 20,930 points, or what I would call 2,093 pips. So this is quite an impressive volatility. And after the big spike and then the big drop, we are seeing the market recover, and we are almost getting to where the prices had ended in the previous week. So prices had crossed here before the market jumped all the way up. So in this case, the market is trying to get back to 2071, and the bullish momentum is not very encouraging, especially considering the price action of today. So today, the gold price hasn't been volatile. So as I had mentioned in the morning during the snapshot series, there was this consolidation zone here, this acting as support and this as resistance. So eventually the market managed to make a clean break here towards the upper side, but the break was not sustained. So the market just pulled back downwards, but then it hasn't hit a new low, which means that the participants in the market are currently attempting to push prices higher compared to the alternative of pushing prices lower. So in this case, there's a good likelihood that we continue seeing gold making a recovery. So on the forward chart, we still have all candlesticks as green, and This is since the news that we saw in the US yesterday. So there's still more potential for upside momentum. So whenever you see such pullbacks, the idea is to look for evidence of bullish entry, evidence that will show you that buyers have entered this market, and that is often green candlesticks or rejection of lower prices. So I think I've answered all the questions. Thank you very much, guys. Thank you for your time. And of course, our last week for the market snapshots, the market pulse and markets at a grand series will be ending next week as we go for a break for Christmas. So next week will be the last week that we cover this year, and then we take a small break, go enjoy the holidays, and then get back on the first week of January. So I'm getting a question here, the Bitcoin lessons, like how we invest. Kindly reach out to me on Twitter. Just go to X and inbox me and I'll respond. So we still have limitations on what we can't do with cryptocurrencies, judging from the CMA. So in that case, it basically limits what I can express to you right on the webinars. But if you reach out to me on Twitter, I'll be able to respond. So I just shared my profile on the comment section. Of course, hopefully I'll be able to help in any way I can. So thank you guys, and I hope to see you on the next session.